I did even Cabral Strategy 1 already, and that one was just based on the strategy alone. So today we'll be doing even Cabral Strategy 2. So the difference between what I did earlier and this one is we'll be adding chart markup to this. So see how effective adding a chart markup to your strategy can be, how it can help you, how it can help reduce your loss, how it can help prevent you from getting into a trade that is not ready yet, and be more profitable. Be more profitable. That's just the most important thing. Getting more profits, making more money than losing. That's what we're here for. That's what we are learning for. That's what we're devoting our time into learning this for. So we'll be adding chart markup to the strategy so that we can see how it can increase our win rate and decrease our losing rate. So this is still the strategy. Like I said, you just need three things. If you remember from the last, for those who are just watching this video for the first time, so I'll just make a quick explanation about what they're saying on the screen right now. So this is the Cabral strategy, right? I'm trying to do this based on those that do not have the premium subscription on the trading view. If I am to do the normal strategy, then these two combined strategy, the other one is kind of painted. I have to reduce the opacity because I only need the fast one. I just need to know if the slow one is above or below my range. I'll explain that later anyway. So I'm doing this based on those that don't have the premium on the trading view. So you can have the three indicators and trade like you want. Right now, these are just the three indicators that you need, which are the Cabral Strategy 2. You can find that here. All you need to type is just the Cabral. You see, this is it. Cabral Binary Strategy 2 is there. Then your stochastic RSI for Cabral Strategy with alert. So these are the two you're seeing here. This is the Cabral Strategy 2. This is the stochastic RSI for Cabral. Then this is what we call the DMI stochastic. DMI stochastic. All you need to do is just come here and press the DMI. It will be the first one that you see, stochastic extreme. So once you click it, once you click the three, you have the three here. It is very simple. You just need to search for the three. I just showed you here. You come to your FX here, search for the three, click the three, and leave the settings that is there. The default settings is what we're using. You don't need to change anything. So I'm going to react some of this. I'm going to put more issue. So I'm just trying to train you based on the three. I'm on premium on the trading view, but not everyone will be on premium. I want you to trade regardless of being on premium or not. I want you to have that freedom of trading, and you can actually do it without it. So what we do first right now, is we put off all these indicators. We put it off. Everything is gone. So it's gone. The way I remove this key is just double clicking on the page we are right now. So it should just be the main chart we have there. So we'll go to the daily chart. I did a video. I already did a lesson on chart markup for binary strategy. You can find that on my channel. You can just search for it. You can see how you can do this effectively. So I won't be going deep into it anymore. I'll just be marking this up. So if you want to learn more about what I'm doing, I already did a video based on it alone, just the chart markup and nothing else. So you come here and take your horizontal line. We get the week of the day before then we'll get the week below as well. day before. That's what we just did. So that's what we do. Then we get the body as well. I won't be explaining this deep because I already did a video on it. So I'm just going straight to the points right now. So the present day right now has not really moved yet. So we just get the week at the top as well. And I think there's a week at the bottom as well. So we go to the 4 hours. And as you can see, our support and resistances are already showing up just from getting the wick and the body. So what else can we see here that we're missing? I'm not seeing anything much. Okay, so I can just get this right here. You can see it's getting beaten up in different places. So we come to the 1 hour, right? Nothing much to see as well, yeah. Nothing much to see here. So I'm just trying to mark up this chart right now. So after marking it up, we just get on our strategy and we see how this would have been super helpful, better than just using the strategy alone. Using the strategy alone, you can be profitable, like I said in the video I made about the strategy the first time. You can be profitable, at least you will win 60, 70, 80% of your trades. But the most important thing is finding more ways to reduce your loss all the time. Finding more ways to reduce your loss and increase your win rate. So this markup is just a way of reducing your loss. It helps you in a lot of ways. You get to see trades that are not ready yet. So you wait for them to hit either the support and resistance before you take them. And before you know it, you are in. So I think we've gotten all this just from getting the wicks and the body on the daily and down to the 5 minutes. So I think we are ready. As you can see, all the resistance and support are gotten for what we're seeing here, right? So what do we do now? We turn on the strategy. Okay, just before we do that, I'm seeing another resistance and support here. Okay, so we turn on the strategy, right? So now strategy is on, and we'll get the remaining. So now let's do this together. So that's what we're here for, right? Let's do this together. Now the strategy is on, and you have your markup on as well. Strategy is on, and you have your markup on as well. So what was the first thing I said about the strategy? I said the moment you are below the 200 moving average, which is this purple line, we are looking for sales, right? We are looking for just sales. So now let's see how many sales we have gotten here with the strategy combined with the markup. So now we were on a downtrend here, right? So on your markup, you have gotten this line, right? So this was broken here, and it was retracted the fourth time. Let's say you won't actually pick this trade right now. You won't pick it at the first time, but you will at the second time. You won't get this right here because that was the first time it retracted. But when the market came back up to that line there, now let's check our two RSI are above our overbought line. We are expecting a sell here. So that will be how many confirmations we are having there right now. So you have this right here. So now you won't get this first trade, right? But it was coming back to your line, your markup line right here. So now you check your stock RSI, they were both up, so you are expecting a sell. You check your DMI, it was up as well. So now, when do you know when to enter the trade? Now, the two are already up, right? This has given you your confirmation to take a sell. You are expecting a sell. This has given you your confirmation to take the sell. Now, this is the difference between the first video I did and this one. Now, the first video I did, we were relying on the DMI extreme to give us that sell before we take the trade, right? Which will be on this long candle right here. This will be when this DMI will give you this sell that you're seeing here. But now, the difference here is we are not waiting on DMI extreme to give us the signal on when to enter the market when you are using your markup. Where you enter your market is where your line is at with the markup. So now this market right now, we saw the market rejected here by the resistance, right? It was rejected here. So the next time the market came up there and we know we're on a downtrend, we're expecting a sell. At that line where it was rejected, where you have your markup, which would be the 1.20922. So at the 922 is when you enter the trade. The 922 is when you enter the trade. You are not waiting for the DMI to give you the sell anymore. But the moment you see this market hit that line, you enter the trade for your 3, 4, 5 minutes, depending on what works for you. Like I said, I would not necessarily want you to trade the way I trade 100%, but I can just show you what I know and what is working for me, so you can take your time and study over time and know what will work for you better. Obviously, I use this strategy just to know overbought and oversold, but it is a strategy I've taught someone is more profitable for them than I. I have my own strategy that I use, but that doesn't mean you should use that as well. That doesn't mean I'll do a video on my strategy. It's coming. I will do a video on that as well. But right now, I want to give you guys many things to choose from. I want to give you a lot to choose from, so you can test each one of them out. After you've tested each and every one of them, the one that you see while you're testing, maybe with your demo, that is more profitable for you, it will be your personal strategy that you use. So as you can see, this is my strategy. If you check this right here, the only thing you will see are lines, support and resistance. And that's what I use to take my trades. Support and resistance. I have a lot of indicators which I will explain when I'm doing the videos on this. Then I have the stochastic RSI, which helps me to know, when I'm expecting to take a trade. If I want to take a call, for instance, I will have to wait to see if this is oversold before I take the call, or if it's overbought. That's just what I use the stochastic RSI for. So if I will take a sell, I have to see this being overbought, expecting a sell, then hitting my resistance, then I take the sell. So that's my own personal strategy. So it doesn't necessarily mean that should be yours. I have people that are taught both and they are using this ever strategy only because it works more for them than the way it works for me. So once you have a lot to choose from, after you've done a lot of tests on your own, you just have to choose anyone you like. The one that works for you best is what you go with. So now you take this trade right here, you can see it went down. So now when will be the next time you are going into the market? Okay, now the moment this thing went down, it did not come up again. We are looking for sales alone. So we've gotten this sell right now. When next did you see the market overbought? It was here. And you can see the GMI as well as crossed up. So the two were up already, we are expecting a sell. So when do you enter the market? You can see your markup line here as well, after you've done your markup. So the most important thing to do first, before really implementing this strategy, is perfecting your markup. Try and mark up 2, 3, 4 charts every day and try and perfect it. Watch the market hit your lines and see it reacting. The moment you are doing that and you're seeing it working, that means your markup is getting better. So once you are in a market like this, you are looking for sales. The market is hitting your resistance. You know, we are looking for resistance and not support here. We are all over resistance. Since we are under the 200 moving average, we are looking for sales alone. So the market is hitting your resistance. You take your trade. So this will be the second trade right here. This was the second time the market went up. You can see the market was overbought here, and we have our resistances. So the moment the market hits your line of resistance, you enter the market. And what can we see the market do? It came down. We would have cleared. So that's two trades. So now let's go again. When next did you see the market overbought? It was here. So now the market was overbought here. So now you wouldn't take this trade. You know why? Now, the reason why you wouldn't take this trade is this. If the market here, let me remove this line so we can see very clearly. Let me remove this line first. We can see here, the market did not touch our resistance here. So we won't count this trade. Although the stochastic RSI was giving you the signal, your DMI actually gave you the signal, and the market actually went down for a bit, but it did not go down well. You can see the market actually over. So we wouldn't take this trade right here because it did not hit your line if you are trading with the markup. If you are using the strategy alone, then maybe you would have taken this trade. The signal was given here, and you can see it's actually reverse bought. Maybe you'd have taken it, and maybe you'd have played, but it would have been a close one. But we wouldn't have taken it if you are using the markup strategy with the strategy. So we won't count this. This will not be. But when next did you see the market overbought? It was here. So it's here. So we would have taken this because the market came back up to our resistance. And what did the market do? It went down again. We are only looking for sales here because we're on the downtrend. Now, let me give you guys a tip tonight. The only way you can be profitable in binary trading is you having a lot of patience. The market always gives those who are patient enough the profits and take money away from those who are impatient. If you are in a hurry to get into a trade, you just keep losing your money. Now, you know, a lot of people that have taken this trade when it was not ready. That's why I said the marking up will save you from a lot of trades that are not yet ready. So now, one would have entered this trade. It's quite clear because this candle was a very big one, but the stochastic the DMI actually gave the sell while this market was already going on. So it would have been a close hold. So this will be the third one. So let's keep going, right? Now we've got this as well, but we will not have taken this trade as well. We will not have taken this trade because this market did not reach our resistance line here. So we will not count this one as well. A lot of people will be like, okay, this trade would have been a clear trade, it would have been a winning trade. Yeah, but what if it turns out to be this? So you have to be patient. Just make sure the market hits your line before you take the trade. Make sure the market hits where you have your setup before you take the trade. Don't be in a hurry. A lot of times the market will not be ready yet to see it kind of trying to reverse you, get into the trade, then it's reverse on you and keep going on. So a lot of time it happens like that. So the best thing for you to do is always make sure you are patient enough for the market to get to your point of setup before you enter the trade. So we wouldn't have taken this right here. This was not ready as well. This was not ready as well. This was not ready as well. So let's keep going. We are still under sell. We are still under sell. So this trade right here would have taken. This would be the next trade you would have taken. That's why I said the market, you have to be patient enough because here we have our markup line here. The market actually was moving in between these two lines, and it came up here and touched this line. This was overbought, this was overbought, and once it touched this line you are in, this market actually came down the next candle, and that would be a very good clear for you. So now we have another one right here. This was overbought, this was overbought. The market came here and it went down. So if you keep going, you see a lot of, I don't actually like going back in time and seeing a lot of trade you would have won, because it's easier that way since we are not in the market while it was actually running. It's better for you to see this in action in the actual market that is actually active, a live trade. It's a lot. It's easier for you to just see a trade you would have taken and you would have missed on trades that are gone. On trades that are gone, going back in time. It's always easier to do that. So I don't really like going back and back and see how many trades you have done. It will be as if you're deceiving people. So that's why I like explaining what I see when I am doing it. So when you have your time and you are studying the strategy, you take your time to study what is working for you as well. You take your time and study what will work for you as well. Are we together? You take your time and see what will work for you as well. So you can see we're on a downtrend here. You would have taken all this trade and you have your good clears because you waited for the perfect setup. You waited for the perfect setup. Let's see an uptrend and see what we would have gotten. What we could have gotten. So on the uptrend here, we are looking for buy. Why did I call this an uptrend? We are above the 200 moving average, right? We are above the 200 moving average. That's why we call it an uptrend. So now, this was the first one I'm seeing right here. This right here. The market came to your previous resistance, turn support, and shut up. It came back there again. It went up. This was the previous resistance that there is nice support. You keep seeing all these trades. That's why I said I don't like going back. It's better when you are actually active and you're seeing this in real life than you just going back in time. But this is just a perfect explanation of how it should have been profitable for you to wait for the line to hit your stop before taking them. So that's just so what I normally do if I'm actually using this strategy right now is I use two layouts, right? One will be 3 minutes, one will be 5 minutes. But you can't do this because you are not on premium. Only premium users can have these layouts like this. So now let's just assume maybe you are actually a premium user. So I want to teach you one more thing about this strategy. It's what we call scaling in with the Cabral strategy. So I've done another video on the scaling in, but it's just better for us to just do this and we're done. So now see this right here on the 3 minutes. We can see it. So it was hitting our line here. This was overbought, this was overbought. You took your 3 minute trade, see what happened straight. The market went down. Although on the 5 minutes it was not actually overbought, but on the 3 minutes it was the perfect setup. That's why I use this. I use 1 3 minutes, 1 5 minutes. But assuming you don't even have that, if you have just one, you can easily just have all your time here. How to do that is you scroll down and you click each and every one of them. You start them. So they will all be there. So you can just switch in between to check what you are checking currently. So if the setup is actually ready, the setup is perfect on the 3 minutes, you can still pick your trade. Or if you want to wait for the 5 minute time frame, it's still the same. So that's what I do. But let me explain the scaling in perfectly. So now what we call the scaling in is this. This is what we call the scaling in. Let me explain scaling in. Okay now. Now, this is the 5 minute right here. This is the 3 minute right here. So now on the 5 minutes, I can see this overbought already, overbought, DMI overbought, and this was getting to my strategy resistance, not actually my own line, but my strategy resistance. And once I have seen it on the 3 minutes as well that they are all overbought, so I'm expecting a reversal soon. So now how do you scale in? Now, instead of waiting for this to give you the sell here, you are waiting for the 3 minutes DMI to give you the sell. So the 3 minute DMI will give you the sell before the 5 minute DMI will give you the sell. Are you getting that? Okay, so if you can see here, right, the DMI was actually overbought, but the stochastic was not ready. But when I check my 3 minutes, it was ready on the 3 minutes. This was overbought, this was overbought, and the DMI was given. See what happened in the market. Meanwhile, if I was just waiting for the 5 minutes, I wouldn't have taken this trade because I would be waiting for this to cross my overbought line. That's one of the advantage of using scaling in. Then scaling in helps you get into the trade earlier. Because if obviously you have your markup, you have your support and resistance, you don't really need the scaling in. You don't really need the scaling in strategy. The scaling in strategy is just to help you get into the trade faster, which your markup will do for you anyway. You know, going into the lower time frames to get into the trade earlier before it's like gone. It's, you know, a lot of time you are waiting for a trade and then it leaves you, then you are looking for a pullback, you know. So avoid all those, you use the scaling in to get into the trade earlier. But if you have your markup already, you don't actually need the scaling in strategy. You just need to wait for the market to hit your lines and you are good. You are good. So this video is just to explain how the markup, you can see the two advantages I've explained about the markup. You know, obviously before, if you don't have the markup, you can use the scaling in to get into the market. But at times, scaling in itself will deceive you. It will tell you it's ready, then you see the market going against you. But with the markup, it reduces your chances of losing your trade a lot more. A lot more. A lot more. So for those of you that does not understand what I mean by downtrend, uptrend, why I'm saying the market is on a downtrend, why I'm saying it's on an uptrend, you might need to check the first video I did on this strategy, the Cabral Strategy 1. So I did a lot of explanation about the uptrend, the downtrend, why we need this markup, how it will save you, you know. So you can check that out first, then watch this again, then all this will be a lot more clear for you. So now, I'm seeing this right now. I want us to see, you know, we are below the 200 moving average. You can see the three trade you would have gotten here without any stress, just from the markup. Okay, now we have our resistance here. This will be the one, it came to your resistance here. So it was actually a support here, it was broken here, we tested here. Then the market came there, you would have taken this trade because it was overbought here, it was overbought here. That would be your one because you are on the downtrend, right? Now the market came back there again here. This was overbought, this was overbought. It came down again, that would be two. So now the market came back there again here on your resistance. And it did again here. That's like 4 trades on a row, just hitting your resistance and you're taking it, following your strategy just the way it is. And it is hitting your upper band, upper band, upper band. So now, one more thing I want us to be clear about, you know, at times the market might not really get too deep into your upper or lower band of the Bollinger Band. What you are concerned about is seeing the market hitting your markup, and this is overbought or oversold, overbought for a buy, oversold, overbought for a sell, oversold for a buy. This is overbought for a sell, oversold for a buy. Then you enter your trade. So at times, there's an indicator that it repeats, it moves. If it's something that is stable that it will not move, then you can rely on it, but it's not reliable. You can't say if what is touching it is actually ready to reverse. No. At times, you can see this market right here. Let me show you. When this market was here, you would think it will reverse, but what happened? It kept going down for a little more while. That's when you now see the Bolivia band adjusting with it as well. So what we are concerned about is the market touching your line. If you are on a downtrend, you are waiting for the resistance. Once the support is broken, you are waiting for it to come back to that support, which is now a new resistance. Then you are waiting to see this is overbought, this is overbought. Then you take yourself. It's as simple as that. It's a very simple strategy, and I will want you to devote your time. Watch this again and again. If you have any questions or anything is not clear, I can do a class again on this. Maybe if I do a class again on this, then I will explain the scaling in that way. I won't even use the markup at all. I'll just do the video based on scaling in, then treat any question you guys have pertaining this strategy. It's very simple. The most important thing to note, because this trading is more of a psychological thing than the technical thing. It's not about the skills alone. You have to be psychologically ready. You have to be psychologically ready as well. You have to know that you won't win every day. You have to have a plan. Without a plan, no matter how perfect your strategy is, no matter how good you are with your skill, no matter how perfect you are, you will still lose if you don't have a plan. So you have to have a game plan. How many wins do I want to have in a day? How many trades how many sessions am I having in a day? How many what time frame am I using for my sessions? How many trades will I take per session? What is my limit for my winning? What is my limit for my losing days? How many trades do I have to lose to close my laptop? How many trades do I have to win to close my laptop? You have to have these things down and you follow it strictly. There are days you will do everything right, but the market is not just respected. Days like that will come, but they won't come more than the days you respect it. You have more days that your strategy will give you wins than the days the market will decide to go against you. So you just have to know that it's just a psychological thing. You just have to be ready, you just have to be prepared and know that you can't win always. There are days you will lose, and you just have to take it that way. So with this, there's no way you will be profitable. There's no way you will make money with the binary. And don't revenge trade. Maybe you lose the first trade, you're like, I want to get my money, then you now increase your stake. No. Maybe you've lost 2 trades, then you want to recover the 2, then you increase your stake. Don't do that. Don't do that. Just keep sticking your percentage that you've decided to trade, and you keep doing that. Don't go higher, don't go lesser, and you'll be profitable. Thank you for taking your time to watch this video. If there's anything that is not yet clear, you can write it down for me in the comment section. I will go through it and get back to you guys in the next video. Thank you and God bless.